Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. We are recording here Friday evening, the 21st, after a wild week and wild OpEx today. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. How are you doing, Barry?
Doing pretty well.
Feel like you're on a roller coaster?
Oh boy. I'll tell you what. But it's a good ride so far. So
Yeah, I mean, it's a good ride.
it's
Let's
good
see.
for short-term stuff, right? Otherwise you'd go nuts.
Oh my God. I mean, if you look at the price action, which we will when you're when you start your big five,
Yeah.
we're right where we were, Tuesday.
Yeah.
With a lot of wiggling in between. Anyway, we'll get to all that, see if we can make some sense of it. Today, it's an interesting thing which we'll talk about when we get to my segment, but we're going to cover wheat, corn, crude, and sugar. Just
All right.
those four. I know you're going to do your normal S&P, the dollar. Oh, I'm also going to do Bitcoin and NQ as well. Bitcoin and NQ are two of the staples. I know you're going to do S&P, bonds, gold, crude, dollar, euro, and copper. So we got a lot to get to. Let's start off with Bitcoin. Unfortunately, the story is the same. It looks dead. I mean, look at the bars. Look at these bars, man.
Mm-hmm.
And this was the most volatile asset on the planet a year ago.
How things change.
And now the bars are tiny. But remember, out of this sort of dullness comes chaos. The market does that. It'll lull you to sleep by going sideways like this for a while, and then all hell's going to break loose. So we're watching. We know nothing's changed from last week. We still have the target.
But it's kind of holding under 20. That's kind of a big deal, right?
Yeah, it
used
is.
to be anyway.
I mean, it's not strong, and we're just waiting for whatever shoe's going to drop here and create the movement. But it is someone is really keeping this sucker in a tight range.
You can't imagine.
The target's the same. The box is still 9 to 12,000.
Yep.
So there's nothing new to report here other than it's Deadsville, and out of Deadsville comes a lot of activity. So let's just be patient, wait for the setup, wait for something to show, and then we can move. Otherwise, there's nothing to do here.
Yeah.
I don't imagine you got anything to add here, but any other thoughts?
Well, I was going to say when we get out of this sideways, hold on to your pants.
Yeah.
Whenever that happens.
Yeah, it'll be a big move.
Yeah.
So we wait.
Yep.
Let me throw it over to you. Let's dive in, see if we can make sense of the yo-yo market that we've seen. There's the MIDI. A lot of movement and going nowhere.
Going nowhere. That's about right.
All
right. So, and you guys, if you haven't, if you're new to the show, watch the last couple of episodes so you can kind of catch up and see how we thread everything, because we kind of pick it up, every week we pick up from last week. And last week, speaking of last week, we dropped down this box and said, basically we need to hold above that in order for it to move higher. And that long as it's above that, we're gonna, things gonna firm up. And mainly it was a half the square, and we also had a big cycle expire right there. And I'll get into that in a second. But for now, you can see, almost a month, we're just basically gone nowhere, just like Ben said. The one thing that did happen was we took out the channel line that was coming down. I should adjust it properly. How about that? There we go. And we closed on the high, and could be due to options expiration. It could be. But the thing that I was trying to emphasize last week was the cycle that finished up here. And to watch that, I remember what we left it off with. I said, that line right there. I said, listen, whatever happens, we need to hold above that.
Right.
Forget this low. We need to hold above that. And we managed to do that, and we even got above this 36.19 level, and stayed above that and firmed up. and looks like it's moving higher. So as far as I'm concerned, this the next stop is going to be right around the 38.25 is really the test. 38.25 to 38.50, let's say. That's where it's going to come up and test. 25 to 40, like 120 down is 40, and that's a 1/3 light on the square. I can change that, get back to our normal square. If you use that, you get up to the third line, and just leave it at 60 for now. And it looks like we could be set up for an ABCD up,
which
and
takes us over 3,900.
and that'll take us over 39. And the whole thing to watch now is how we handle next week along this line. And so, we're back to that 38.25. Somehow we get above that and hold above that, then I think we have more upside left.
Mm-hmm.
Otherwise, we could range a little bit longer. Why not? It looks like everybody's comfortable here. So, and everybody's got their positions. Looks like it's that's how it's set up. But like I talked about the cycles ending, and if you go back 3 or 4 episodes, we talked about how important this low was, and you can see this was a false break, and we had a pretty good run up off of it, and we had the sort of what you'd call the pullback, and today it was a huge, outside day reversal off of that pullback. And you have to watch those and respect those. So, we're technical people, so we have to follow along with that. And so I would say what has to follow would be to go up and challenge this 38.25, 38.40 level next. And if we can get above that, then we have a lot more room to run. Maybe even 4,000. So let's see how it goes. Looking at the weekly chart, where not much to do because not much happened here. We came down, we had the low, then we had the week where we had that sort of a false break, and now we're lifting off of that. So here's what I have to say. If that low that came in early October, the one we've been talking about pretty much every episode ever since, and going into it, is that this is why we talk about it. It's important to know, it's important to remember where those lows coming and what happens afterward. We can't just forget that. So I keep reminding, even after 3 weeks, almost going into a month later, just reminding people, hey, we had something big coming around the low, and that could spark something. Now, the time we had to sort of invalidate that, I think reasonably, I would say it's past. And now if we took out that low, and we talked about this, for you guys, if you didn't catch it, we talked about this last 3 episodes, at least 4, maybe 5, about the importance of it and what happens and how price should react and what happens if it doesn't react that way. So we talked about the downside and how that has to happen. And we talked about the upside and what kind of price action we'd want to see. So here we're seeing the price action clearly showing that the markets are stronger than it was, a couple 3 weeks ago. Maybe not the sentiment, but technically it's kind of holding up. And 39.90 is the 52 square 52 coming down. So we went to the half square. So I'm guessing 39.90, 4,000 is going to be the next test, just because that's where the square is. And we have to, even if this is a counter trend going up on the way down, it'll have to go up and test this area. And, just to stretch out the weekly a little longer, if we somehow manage to get above it, we might have some kind of a surprise run up that's going to catch everybody off foot. But we'll watch these levels and see how we do. We, as you guys know, we go square at a time and half squares. So right now it looks like this area held, and we're looking for it to go up and test the 4,000 area up here. And getting back to the daily, it's a little bit zoomed in. So here, 4,000 is quite a ways up. And the first challenge would be this 38.25 area. and we'll look, and if it breaks it decisively, man, this could fly because it's going to catch a lot of people on the wrong foot. So watch out for that. And, you want to hear about a bear market squeeze, we're going to see one. So that's what I have to say about the S&P. You have anything to add there, Ben?
No, just the ABCD looks like a reasonable first target if we can get above that 38.25.
Yeah, it's almost a gimme, right?
3,700 was a huge battle. Like 4 out of the 5 days we were battling in that level. So the push today, shows that the bulls won that battle there. So we just got to see what happens if there's some follow through next week.
Right. And so 39.40. Well, the ABCD ends right around 39.16. Let's say 22, right in there, 22.40. So this area looks like the place to go. But before that, we really need, there's a big challenge up here. We have this old high that stopped right on, we tried 3 days to get above 38.25. If you remember that, we couldn't. So if we take that out, it's really going to, if we can take that out and we can't make it again and we false break it up here, then, we're probably trapped in here till elections maybe. But otherwise, I think it's kind of primed to go. And the fact that all those other cycles expired this is how, it's out of that ending that this is starting. So it could be something, it could end up being something big. We'll see how it goes. All right. And let's move on to bonds. And if you guys
different story there.
Very different story there. And I was just going to remind everybody, you guys, if you like the work we do and the stuff we do every week, please click the likes and share the work and maybe subscribe and click the alerts so you guys can see it as soon as we post it, which is really not a regular event. Ben can tell you, right?
Very random times.
Yeah, random times. All right, bonds. What can we say?
Weak,
and we left you off by saying if this low gets taken out, if this line gets taken, we're going to go probably the halfway point. So we're on. And remember this trend line. I drew up this channel line saying, this in here it looked like a good that could have been a good low, right? And on the pullback, how we were reading this was, if we were able to hold above this, we had a chance because of the square and everything. We had a chance to run up. The fact that we just broke down, like with no spine, it's in trouble, man. There's no question. I mean, it's been in trouble, but it's not, it's even in more trouble.
But the trouble's not over, I guess.
No,
is the point.
No, trouble's not over, and in a weird way, it might be just starting. So.
And the interesting part here with what really makes this whole market tricky is the cycles are there on the 13th as well. We had a low on the 13th and we took those out.
Well, so that's the big tell.
Yeah.
It wasn't supposed to take it out if the market was strong enough. And we were watching in a number of, we had a lot of cycles, a lot of markets that had similar cycles expire about the same time. So all of them were watching to see what the post-cycle behavior is going to be. And here, post-cycle is just, rolling over. So that's not exactly bullish.
Right, because we not only on this market, we had price and time because we had the half square timing.
Oh, yeah.
And the full square price. So
yeah. We had a lot of stuff, actually.
It's what makes this game so hard, right? Is equities are saying one thing and now bonds are saying the exact opposite.
Yeah. Well, I think those connections and couplings, they couple and decouple. And so that's why I always treat, even though the connections are there, I always treat them separately and try to trade each one on its own. And so, so that's not much of add to here. It's an easy market to trade. Just don't go long. And around 113 is the next target. Take a look at the weekly bonds. Pretty much the same story. Racing towards that 114 is what we have as 144 down. And we joked a couple of weeks ago about, hey, wouldn't that be something if it squares out here?
Yeah, 144 by 144.
I don't know, the speed's a little too fast to square. I mean, we might just blow right through and square out down here somewhere.
Right.
At this at this speed.
Hmm.
Nonetheless, we got to watch it. So it looks like 13-14 is the next stop. So if you got those puts, those are the areas to watch. Not much to add, it's behaving.
It's trending.
Yeah, it's trending. It's behaving as expected. So it's
Mhm.
good. All right, moving on to crude. Let's take a look at the daily chart first. So this has been what a story, eh? Wow.
Hmm.
But I tell you what, if you were trading this with fundamentals, you'd be halfway to an institution by now.
Right.
All right, we left off with 83, 91, and more or less we bailed out above 83, still under 91. So this is all sort of consolidating up here. We're doing all of it on top of the highs we had in October, November. We talked about this circle, for a few months, saying that, once it breaks, we should get a trend in the opposite direction. And for that to be true, this low had to be held, the September low. So far, we had a nice counter trend off that initial move up, and we're holding it. We held the low so far. And basically, long as we're holding above the square, 144 up from the COVID lows, if we're holding above that, it's okay, ready to go. I mean, let's just say it's on firm grounds, right?
Hmm.
So an equal move would get us up into about 105, 106. But first things first, we need to hold above 83, and then next 92. And of course, once 97 gets taken out, I think it's going to be strong.
Hmm.
I think it's going to be a very strong market. Might even happen after 91, but this is the half square. So if you notice, just a quick heads up, if you notice how when we broke out above that exact half square before, see what happened? We just went ballistic, right? See how the volatility increased above that, and we held above that, and all the big moves. And it's nothing but coming off of that low in 2020, and we're looking at 2.5 squares up. Anything you want to add here, Ben?
I'm going to talk about it, so
I'll talk about it.
hit on
Okay. All right, good.
Yeah.
So looking at going to the crude, the weekly chart, well, not much. We're still above the low, and we called out this 45 down to be really good support, which it was, and looking for it to trade higher. At least, the half square is around 101. Eventually, basis weekly, we should sort of mosey on up there, at some rate. Long as this is held, there's, what else can you do, right? So looking for that as a target. That's all for the weekly. God, you know what? I always feel like when the markets are trending, there's really nothing to talk about. Like you almost feel stupid because, like, what are you going to say? Everybody can see what's happening, right? There's nothing tricky going on. So anyway,
it's nice when they behave.
Yeah, it's nice. Makes it easier. So what do we see here, Ben? A double bottom that's going to hold. I guess we had a little bit of a false break, right?
Tiny little false break and a huge outside reversal.
So that we had to pay attention to, because even the tiniest false breaks could trigger all kinds of moves. Like up here, we had it back in May, false break, and that started a huge leg. Well, gold's kind of the same deal. We had similar cycles expiring here, ran up, came down. I guess making higher lows are not in fashion these days. It's more about false breaks, right?
Right.
It's just like it's a season.
Yeah, no question.
So we got to watch those. And, false break, I'll take that. So I would say cycle still holding. That's fine. So we'll see how it plays out. We really, we want to see it holding about 1646 to do any business. So till then, we'll wait. All this is going to look cheap at some point in the near future. But for now, if we can trade this, we have to wait till it gets about 1646 to tell us that the trend is changing.
The thing I'm going to look at in gold is I'm going to drop down to the 4 hour and say, okay, on the next pullback, do we get a higher low? Can we get something,
Mm-hmm.
something going on a 4 hour
Right.
and see
Right.
if
Yeah.
see if that daily signal, the outside reversal, really makes sense.
Right. But this, this price action today was impressive. Just
Yeah,
to
no
snap
question.
out like that.
Yeah, it's just
I
like
mean,
just like ES, same type of move.
yeah. Yeah.
So we'll
All
see.
right. Yep. Moving on to the weekly gold. I don't know if you guys can see this, but look at where it stopped. You see that ABCD, we had it drawn out
Mm-hmm.
and boom, boom, there it is. But I'm not really impressed yet. Basis weekly. We really need to take out this, we need to get above the square to trade it peacefully and be able to sleep at night.
Right.
And under that is a little tricky. And that's really about 1700. So we'll see how the price action firms up. But up until then, it's still a little dicey. Plus, we get a ton of overhead now, a ton of gold, but still,
Yeah.
you
Yeah.
know. And if you guys didn't see the long-term chart, well, this is where we start, and you can see it's a really critical level. We're sort of riding. So we'll see how it works out. So far, it's firming up a little bit. Price action is okay, acceptable, let's say, but we need some more evidence to see that it's really moving in the other direction.
Yep.
Now, copper, man, do we nail it or do we nail it? So we don't have 15 numbers on the chart, just one. Look at that, Ben. 330.
Super important.
Yeah, very good number. We came down and tested it Wednesday, Thursday, held it pretty well, and all the metals kind of followed. Today everything ran up a little higher. So what's happening is, we're starting to make higher lows. We're 330 is the number we've been watching since we started this, adding copper to this, and we're watching the downtrend line. We took out the steepest part of it, and now now we should be watching to see how the counter trends hold, and if they hold in a fair way, we can probably start trading it soon. And Ben, I'm sure as soon as it gets into trading mode, you'll be calling it out.
Exactly.
We'll
I
wait
like
for
copper.
you. Yeah, we'll wait for you to bring it out. It's starting, right? It held the right points. And the biggest thing was this, I wish I was a long-term trader, because what great places to just load up, right?
Yeah, I mean, when you look to the left on the longer term charts, a lot of these commodities show you that.
So here, we had this fork, never moved it, and you can see how it's conforming just perfectly. And we wanted it to hold above 90 for it to be on firm grounds, and it's doing it. It's sort of a dance. It's holding above the line for sure, and all the closes are basically above the 90 degrees up. And next week, if we can somehow hold above the 90, I think that's a big deal, basis weekly. So we'll be watching for that. Moving on to the dollar. Well, looky here.
Wild day today in the dollar.
Well, and I tell you, without these squares, we'd be dead. That's all I can tell you. So it has that little double bottom thing, kind of like in gold. A big reversal, and this is where we left off last week. We talked about how important this high was. We had that 90 week cycle on the weekly dollar and a lot of currencies, and this thing squared out. And I said, look, we got to watch the next counter trend. Well, here's the next counter trend. Failed, came up, false break. So this could be the one with legs. So watch it for next week. It could drop and surprise everybody. At least for the time being. Not that the dollar might be done, but you have to respect the counter trends and how, when they fail to gain ground, right? If this was on fire, we'd be above this. We'd make new highs today.
And given the correlations, it fits with a continued equity rally. If we see weak and gold rally and copper rally and commodity rally, so it's very interesting to watch how it all fits together.
And if you're watching the show, right, Ben, I mean, it's easy to see when we cover each market. You can see how it sort of correlates, not in the fundamental way, but technically.
Yep.
Something's squaring at the bottom, something's squaring at the high. and they all sort of line up.
Because the charts are picking up the flow of funds, essentially.
That's right.
So,
that's right. It's an easy way to track it.
mhm.
So looking at the weekly, here's that big square. Boy, you know, I might have to frame it one day. I mean, look at that. So we went up there, we squared, steep channel. And
Look at the close, man.
yeah, right.
Unbelievable, right?
Yeah.
Just a random number, right?
Yeah, nothing to worry about. Nothing to see here. But listen, this is really important. Like next week is going to be important for the dollar, no question. You know, here's our 112 number. Really couldn't really hold above it. And God knows we had plenty of space to stop above that. We didn't. And we closed on the square, more or less. So, like I said, you know, if we get under 112 next week and can't, you know, counter trends can't get above that, I would say, you know, we probably have some downside. And so be ready to trade that.
That's a hugely important spot for the dollar.
Yes. Especially post the cycle expiration, right? So it's a big deal. And don't say we didn't bring it up. All right, moving on to the euro.
The poor little euro.
And it's not done yet, so you know.
No.
It's, but getting a little breather. So we saw this 288 degrees down, and we called that out for being support. And then we looked for a test of either the half square or this block we had blocked off, I don't know, a couple of months ago. And we've been sort of between that. It's a big range, but what's happening is, you know, we're making higher lows. So it is a signal, a little bit of a signal that, you know, we might attempt somewhat of a normal counter trend instead of these really weak counter trends. So we'll see. We'll be watching to see the strength of that counter trend, and that'll help us figure out what the currencies are doing, and we'll go from there. But I think whatever this counter trend is, we're probably still not done. You know, yeah, we went down to, you know, we went below par, but it's probably still not done. But we'll see. That 90 cycle that hit the dollar, obviously it was 90 weeks down in the euro also. So we have to respect that, meaning we could have a low there, you know, and it could be, might not be the low, but it could be big enough of a low to watch your positions.
Absolutely.
So going on the weekly, this 99.20 is sort of the key level that I drew out. Just one number. That's all we're watching. And we talked about these 2/3 being support last week. Well, before that, so we held the support there, and now we're between these two levels. And I would say until we get above 99.20, it's up in the air a little bit. Plus, the down channel is still intact. We can't really call it trend change, but we know there's some support here, and we're watching for resistance to see if it can hold or not. And on the daily, with the daily stuff, not much to do really. I mean, we could go up and test this, which would line up with the dollar coming down a little bit since we couldn't hold that square up there, right? Since we couldn't hold that, it's coming down. So it makes sense. The euro would
Euro may push up,
push up and go the other way. And because we do have you know, we could call this some kind of a ABCD down. That could be kind of a target too, which is beautiful. Look at that, right into the half square. I would like that. That would be nice.
It would be a good pullback.
Yeah, it'd be a
we
good
can then
pullback.
see if it's going to build and, you know, they can make its next run up.
Yeah, if we can hold here, that'll give it enough to, you know, take up another leg. So,
and it also get all the doomsday, the dollar's going to zero, people all fired up and just in time to get smacked.
Yeah, and they never learn. So that's just how that goes. All right, that's all I got. Let me put it back to you. Let's cover the commodities.
Excellent.
All right.
Great review of a chaotic week.
Thanks, Ben. Well, Ben, I see that same ABCD going up into your full square, coming off the low.
Good eye. The full square is right where it ends. That would be too perfect, wouldn't it?
That would be. You should put it on there, see where it goes.
No, it's right. The reason I don't
Is
have
it
it
way
on
up
there,
there? Okay,
no,
okay.
the reason I don't have it on there is it goes right. You can't even see it. It goes right into the
Ah,
square.
right. Oh, okay, okay.
Watch
Ah, yeah, right there.
right there.
Good
So yeah,
enough.
that's a potential target for sure.
Yeah, yeah.
I
And a
mean,
good
the
false
key,
break target too.
yeah, I mean, the key we talked about these last few weeks has been this half square, this 11,280.
Mhm.
Below it, it was, we were going to go back down and test the lows. Above it, we open up the full square possibility. So maybe we do the ABC and we go up and hit the full square. But you can see the battle that's been going on there. You know,
Mhm.
4 out of the 5 days. One day we got stuck below it, and then the other 4 days we've been crisscrossing it. So it's still to be seen whether we can hold this gain or not. And so we have to watch and see. But this is your key level.
Right.
Above that, we open up the ABC and the full square up here, which is 11,885. Below it, the pressure's to the downside again.
Mhm.
So not much has changed. The only other things I would touch is that we had the big outside reversal today, so there should be follow through next week, but we'll see. Timing wise, November
Mhm.
2nd is 56 days, which would match up with the high to low of this run here, this last
Right,
leg we
right.
had,
Hmm.
into this low that, gave us a nice rally. If we go out to 90 and we did a high to low of 80, the first leg, and I just said, okay, what if we did 90? Takes us
Hmm.
into almost Christmas, December 20th.
Right.
So we're watching those from a timing. Very powerful bar today, closed above the half square. Now we have to see next week, do we settle above it? Create sort of a platform for a push all the way up to the full square. If we keep crisscrossing it, chances are we're just going to stay in that chop that we were in, most of last week. So, what are you seeing when you look at that?
Yeah, I kind of link it up loosely with the S&P, and it, what we do know is that cycle that came in held
Mm-hmm.
even after the false break. So yeah, I think we have upside at least to the ABCD target.
And so all these levels, by the way, in all the markets Barry covers and the markets that I cover, in addition, the ones we don't even talk about on the show, all the levels are on a Google Doc spreadsheet that we'll post the link to when we post the link to the video, so you can see the levels there if you don't get them when you're watching the show.
Mm-hmm.
On the commodities, the kind of message that I was getting from the charts in the review for the show today was not yet. Like, they're not ready yet.
Mm-hmm.
They're trying. The ones I want to highlight this week, wheat, corn, crude, and sugar, are holding up better than all the others. Like, they're
Mm-hmm.
resisting the decline more than, say, soybeans, more than gold, more than cotton. Coffee was one of those previously. This week they got to coffee and they kind of flushed it as well. So we're going to focus on those because generally one of the things you see when markets are under pressure, whatever resists going down, it doesn't even have to go up, but if it resists going down or goes down less, that relative strength usually comes into play when the money comes back into the sector. So
Right.
it's why I'm highlighting these, and we'll go over them and sort of show you why I think they're acting better than their peers. First one is wheat. We tracked this into this bottom. This was a jagged bottom coming in. We tracked that low, and then we got a
Mm-hmm.
nice push up. And
Mm-hmm.
you can see multiple times we tried on this full square and failed. And now we're having this first pullback.
Right.
This past week, almost the entire week was spent battling at this half square.
Mm-hmm.
So it shows you the importance there. And as you see, when you look left, why it's important, it was sort of all the counter trend highs on the way down, that last part of the way down are right in this area. So we're testing here. As long as we hold in here and can reverse, very positive, because it potentially gives us the 1, a 2, and we catch possibly the next fast wave coming out of here. So that's the key point. We're not giving back a lot of the gains that we had. We are definitely holding the August lows. Those haven't even been threatened yet. And as long as that continues to happen, this is a bullish market. What do you see here in the week chart, Barry?
Yeah, well, outside of what you said, I think that 750 area is a big support. So long as we're above that, hovering above that, I think we could break out, you know, in an orderly fashion.
Mm-hmm.
Yeah.
So
yeah.
we'll watch it, see how the pullback continues to develop.
And that trend line looks very strong also.
Yeah, it's a good one from way back. So we'll see. We'll see
Yeah.
how it goes, but that's one showing some decent relative strength.
And just had a good correction.
Yep.
So
here's another one. And look at this. Look at how difficult it is for them to even correct this thing.
Right.
You know, corn is showing really, really good strength. It bottomed before wheat. Wheat was in August. This thing bottomed in July. It's had, you know, a good 2.5 square move off the low. And now we're banging our head up against this half square. So it's creating a little bit of resistance, but the support on the full square is holding really nicely. So the correction is more of a sideways thing so far. I mean, we could come all the way down to this half square and still be super bullish. So corn is holding up really, really well. It's the best of the grains right now, wheat being the second. Beans still has some more work to do, I think. So I'm not going to highlight that, but corn is the strongest one in the group right now, and you can see why. You know, the correction's been sideways, the full square is holding, and we're sort of, you know, squeezing to where we can get potentially the next push up here in the not too distant future. Anything else jump out to you on this corn chart?
No, it looks good. We talk about it last few sessions, and it's holding well. It's doing the higher lows. I think we can, you know, people can start watching it for long side trades.
No doubt about it.
And that sideways might be coming to an end soon.
Barry covered crude. This is one I wanted to show because unlike gold, which is, you know, making a double bottom or some sort of false break low, unlike cotton, which is making a lower low, or coffee, which is making a lower low for this pullback, so far crude is making a higher low right in the place where you want it to, which is on the full square here. We tracked this thing into the low, had a nice push up that made it to the half square. Pullback came right down to the full square here, reversed up. Today we reversed back down, but we closed near the highs. As long as we're above this, call it 81 to 82 area, this is bullish. Yeah. You know, we're holding above this spike low it made. You saw that really nice move coming out of here. And now we're just watching to see how this higher low, if it can form and hold, it gives us the platform to push higher. So I think crude looks good. If you look at the weekly and the monthly charts, very, very positive in terms of where the pullback has stopped so far. On those time frames, you know, the weekly and monthly resistance is in the 88 to 89 area. So if we can clear, you know, this area, call it from like here to here, if we clear that and sit on top of that, then the weeklies and the monthlies turn really bullish because we're escaping either a half square or a full square there. So it's in the zone. We're getting the formations that we like to see at a turn. And if price action keeps showing us this bullish tilt of a higher low, crude's a market that, you know, the odds favor will have a good push higher. I know you covered crude pretty extensively, Barry, but is there anything that jumps out to you here on this chart?
Well, I would say be patient and watch that low, because that's on a very critical spot. and we saw that in all the charts, even yours. You have that full square line. I'm talking about the pullback low here. So
Yeah, right here.
mhm.
Yeah,
So,
it's really important.
mhm.
If we lose it,
I'm looking at it like the low is in place till
Mhm.
I'm proven wrong. So that means I'm really focused on the counter trends and how the market's moving with an eye on
Agreed.
the upside, right?
Yeah, especially because this low here that he's talking about
Mm-hmm.
came in on very important support on the weeklies,
Right.
on a higher time frame. So
Mm-hmm.
until
And time
proven wrong.
cycles also.
Yeah, yeah, it's good. We've been talking about this one for a while. I changed the settings a little bit on the square. The numbers don't change, but I wanted you to see how basically this entire correction for since June has been within this half square. It's really winding up, right?
Right. Right.
And as it does that, it's sort of building pressure and building like ballistics. It's building thrust that once it gets out of here, we're going to see a pretty powerful move.
Mm-hmm.
What we're watching to see now is can we break above this full square, sit on top of it, and then that's the launching pad.
Right. Now, yeah. Mm-hmm.
And as you look back, look how long we've been going sideways here. 18 months, almost 2 years.
Mm-hmm.
So while it's been correcting and it's been dull and it's been boring and you haven't been able to trade it, it bears watching because it's building this base like a lot of these commodities did, for years on the monthly chart before they did their big breakout. And I think sugar's one of those commodities that's doing that right now.
Mm-hmm.
We saw a false break here, push up, then found support on the half square, went up. It's acting like it should. Tested the full square. All week it was trying.
Yeah.
Pushed down a little bit near the end of the week here. Now we want to see, do we get this higher low? As long as this, right now, we're operating under the assumption that this false break low was good, right? Tried to come down here, couldn't do it. Now we want to see what happens with this pullback. Does it sit on top of this structure here? That would be bullish. That's what we're looking for. So we're watching the price action, knowing that so far we've got a low in place. Now we're looking at the counter trends. Now we're looking at the pullback. Do we get the structure, the bullish structure that gives us the odds being in our favor to get involved on the long side? And that's kind of what I see in sugar right now. Again, it's avoiding the moves like cotton has made, or it's avoiding what happened to coffee this week, or it's avoiding what's happened to natural gas. It's avoiding a big down like we saw in copper. And that speaks to me. So that's why I keep bringing up sugar. Anything else to add here on sugar, Barry?
Well, it's quietly making higher lows, and everybody should take note of that.
For sure.
Not to mention higher highs.
Yeah. So this week it's kind of a pivotal week, isn't it? So what are you specifically looking at this week?
Well, to see S&P could continue, maybe a push up into elections, possibly. Well, that's something to watch. To see if bonds get to the target, that's something we're tracking. And crude, all the majors.
Right.
Corn, I got to really watch corn here. Corn is really important. And there's a couple of other markets like cotton I'm watching, and corn and wheat for sure. Gold, just not trading, but to see how we're holding here, see how we're, moving out of these lows or not. And of course, the dollar.
The dollar is key this week, isn't it?
Yeah. It's very important. It's funny, last couple of months, man, every week is important. It's some critical spot, right? Everything's somewhere.
Mm-hmm.
So it's a time to be fully awake.
And it feels like there's like something big going to happen in the markets, and it could be big upside, it could be big downside, but it just feels like everything's been like the top on the pressure cooker is about to be released,
Yeah.
And I felt that for a while, and it seems like, and it may be to the upside. I mean, who knows? Today could have been a preview, but it feels like there's a major sort of move coming in the short run. So we'll watch the different markets. The good thing is we don't have to predict. We have the levels, and when you capture a level, you can say, okay, now it's bullish. Or if you lose a level, you can say now it's bearish. And that's the beauty of using the squares, is you don't have to go in with a bias. Anyway, good show, Barry. Good job on your review, and we'll rest up and be ready to roll this week.
Thanks, Ben. And
Oh.
good job. We'll and everybody have a good week.
Have a good week, everybody. We'll
Yeah.
talk to you soon.
All right. Bye-bye.
Thanks.